Very good afternoon to everyone. I, CS Surbi Jain, on behalf of Institute of Company Secretaries of India, extend a very warm welcome to our respected speaker and our participants who have joined with us on this session on ReITS and InvITS under the umbrella of EEE 5.0 Master Knowledge Series. Members, before we delve into the topic, we are delighted to announce the fifth ICSI Board Mentorship Program scheduled to be held from 8th to 11th of January 2026 in Jaisalmer, Rajasthan. And for further details, please visit the ICSI website. Now, coming back to the topic of the day, Real Estate Investment Trust, REITs, and Infrastructure Investment Trust, InvITS, are innovative financial instruments designed to channel long-term capital into real estate and infrastructure sectors, respectively. REITs primarily invest in income-generating real estate assets such as commercial buildings, office space, shopping complex, enabling investors to earn return through rental income and capital appreciation without directly owing to the property. InvITs, on the other hand, focus on infrastructure assets like roads, power transmission lines, renewable energy projects, allowing investors to participate in both in income generated from such operational assets. Both REITs and InvITs are regulated by SEBI, which ensures transparency, accountability, and investor protection through detailed disclosure and compliance norms. These instruments provide a mechanism for developers to unlock the value of completed asset while offering investors a stable and a regulated avenue for regular income and diversification. Today's webinar on REITs and InvITs for the members of the ICSI would provide an insightful exploration of these emerging instruments in India, financial and regulatory landscape. This session will focus on the understanding the structure, formation, and regulatory framework governing the REITs InvITs as per SEBI Real Estate Investment Trust regulations and SEBI Infrastructure Investment Trust regulations. And with this a small introduction of the topic, now I would like to welcome the eminent speaker for today's session, CS Richa Gupta Rohatgi, for further deliberations on the topic. And now let me have the privilege to read her brief profile before our members. She is currently working as the Company Secretary and Compliance Officer of the Cube Highways and InvIT. Cube InvIT is one of the largest InvIT in the road asset sector and operates a group of 27 road assets. She is a law and a commerce graduate and member of Institute of Company Secretaries of India. Highly experienced and seasoned company secretary with more than 15 years of expertise in corporate restructuring, corporate governance, and compliance management. Proven track record of spreading complex corporate transactions, ensuring seamless compliance with regulatory requirements, and driving business growth. Previously, she was associated with renowned organizations such as Bharti Airtel Limited, Bharti Hexacom Limited, Eldeco Infrastructure, Religare Pacific, and SRL Limited, where she successfully led the compliance function and ensured adherence to the corporate governance norms. And with this profile, we welcome her in the 30th session of EEE 5.0 Master Knowledge Series, and I'm confident that today's deliberation will enrich our understanding on the topic and equip us with the updated knowledge on REITs and InvITs. Once again, I welcome you all and thank you for taking time to join us today for this session. And please post your queries, which will be taken up either at the end of the session or during the session. Over to you, ma'am.
Thank you, Surbi. Thank you for the quick introduction and setting the context for today's session. I welcome you all and very good afternoon to this today's session on REITs and InvITs. I'm very happy to take you all through this innovative investment vehicle which has been recently evolving in India. As we all know that India is one of the fastest growing economies in the world, which is driven by actually infrastructure development and our urbanization. With a growing population and increasing urbanization, the need for a quality infrastructure and real estate is on high rise. The Indian government has also been very actively promoting infrastructure development through its various initiatives like Make in India, Smart Cities Mission, which has been expected to boost economic growth and create new opportunities for the investors. So, according to a report by the World Bank, India's need investment of approx $1.78 trillion in infrastructure by 2030 to sustain its growth momentum. So this presents a huge opportunity for investors to participate in this India's growth story from here. REITs, that is Real Estate Investment Trust, and InvITS, Infrastructure Investment Trust, have emerged out as a game changer in this Indian investment landscape, allowing individuals to invest in real estate and infrastructure projects, which was actually earlier only accessible to only large institutional investors. In fact, the Indian REIT market has grown significantly since its inception in 2019, with several successful listing and strong investor response. The total AUM, that is assets under management of REITs in India, have grown to over 3 lakh crores, with major players like Brookfield, Embassy Offices REIT leading the way. Similarly, InvITS has also gained parallel traction and with several infrastructure projects being listed on stock exchanges. So, with this background, today I would like to take you through the basic concepts of REITs and InvITs, their benefits, regulatory framework, and success stories, as well as the risk and challenges associated with these InvITs. So, let's get started with a small presentation. So, please let me know once the presentation is visible.
Yeah, ma'am. Yes, ma'am. The presentation is visible. We can have the first page and in the slideshow mode.
Is it
Yes, yes.
okay? To start with, what is REITs and InvITs? Let me take you through the basic concept and definition of REIT and InvIT to make you more understandable. So, REITs are the vehicles that own and operate income generating real assets, allowing investors to earn share of their income produced over this investment without directly buying the properties. Otherwise, in a real estate project, we have to own that property or operate them to generate that income. So REIT give is a very interesting vehicle to invest into the small bit of the REIT product. As per the SEBI REIT regulations, real estate includes buildings, that is offices and malls, or etc., hotels, hospitals, convention centers forming part of composite real estate project, common infrastructure for composite real estate projects like industrial parks or SEZs. InvITS is the investment instrument that enables direct investment of your money from real estate investors and institutional investors in infrastructure projects to earn returns on investments. So, as per REIT regulations, infrastructure, which is covered into this InvIT structure, is as per the notification issued by Ministry of Finance way back in 2013, which has bifurcated and demarcated the definition of infrastructure, which will be covered in InvITs, is transport, energy, water and sanitation, communication, and social and commercial infrastructure. So these are the areas or these sectors which can be covered into these vehicles. So coming to the structure of REITs and InvITs, what is the structure that REITs and InvITs provide, and under what structure do they operate? So if we see here, REIT or InvIT is a trust. Trust has a sponsor to it. A sponsor acts like a promoter whose key role in InvIT or REIT is to set up the vehicle, set up this trust. They identify and acquire the infrastructure assets, manage the InvIT operations if appointed by the manager, hold a significant stake in this InvIT, ensure the compliances and regulations are there, strategic direction and oversight wherever it is required. So it's a strategic role, just like a promoter that we have in an equity entity. A sponsor plays an important role here in an InvIT. Since it's a trust, so trust has a trustee, and trustee plays a crucial role in this trust, which acts as a safeguard for the investors, ensuring the InvIT operations, REIT operations operates as per its objectives and the regulatory requirements. Trustee is basically holding the asset of the trust, REIT or InvIT, on behalf of the investors, It ensures the compliances with regulators and the trust deed has also been entered. It oversees the InvITS or REITs operations and or activities. It protects the interest of investors and maintains the transparency and accountability in the whole structure. The another important party or in this structure is project manager. So project manager for any InvIT or REIT, that it oversees day-to-day operations of infrastructure project. So in this trust, sponsor is not doing the day-to-day activities. Trustee is overseeing the and owning, taking the responsibility to ensure the trust assets is in law and order on behalf of the investor. So project manager is the real entity who's taking the day-to-day operations of the infrastructure projects. It ensures that the project is completed on time, within the budgets, within the regulation framework. It manages the risk issues, day-to-day issues involved in it. It monitors the project performance and reports to the InvIT in turn. It ensures the compliances is being done in the regulatory framework as per the agreement, as per the regulation, and in turns is answerable to InvIT. So we learned about sponsor above the InvIT, the project manager, which works with the REIT, InvITs, and the trustee, which is in parallel, who holds the interest of the unit holders. So in a trust, it's the piece which every unit holder holds is unit. Instead of, like as we say shares in equity company, we call it units in trust, and the people who are holding units are unit holders. So how the cash flows flow, and before coming to the cash flows, the each asset, each, for example, an InvIT is running a toll asset. So each asset will be held in each separate SPV, and separate all these SPVs comes under InvIT or REIT structure, where they hold 100%, generally hold 100% of it in each SPV, or through a holdco structure. So let's discuss on the cash flow that flows to InvIT and REITs. So unit holders infuse money at the time of issuance or any other preferential allotment, other type of allotment through which unit holders' money is infused to the trust firm. Then, since REITs and InvITs are a pass-through entity, so it flows this money to its SPV, which is actually running the core asset or core business for the trust. So REITs and InvITs gives loans to the SPV, and SPV in turn makes their own cash reservation and requirement under it. How the money goes upstream from a trust is through either dividend, that three components to that, dividend, interest income, and capital repayment. SPV cash flows also gets upstream to the InvIT through dividend, through interest on REITs and InvITs loan, that is from promote, like as we say that holding company is giving loan to the subsidiary. Likewise, the repayment, the interest and the repayment from SPV to the trust is one form of the cash flow upstream, or share buyback is another option. I hope I'm making this structure clear, because this is little tricky or maybe easy to understand, but little tricky to understand when the structure is being presented here. So each SPV is holding the infrastructure asset or the real estate asset. I'll pause for a second for everybody to have a look on this structure. Fine, let's move to the next slide. So how is this structures, this vehicles are contributing in Indian economy or capital market? So we always have heard that InvITs and REITs are economic growth, are driving the employment generation, that have institutionalized the real estate and infra, which was never a regulated or a institutionalized working manner, that have supported the tech growth in India. It has ensured urban development in leaps and corners to the country. It has improved the depth of the capital market that we are doing. It has been one of the highest contributors to India's GDP. It has aided in the infrastructure development by leaps and bounds in India. It is one of the largest contributor to employment generation in India. The supporting IT and IT related services has also been contributing in the growth of India development story. This is the way of institutionalization of the ownership of the asset. As we all understand that real estate and infra, we have been always been a doubt that this is not being regulated by some entity, some regulator. Now this is a professionally managed, transparent governance, attractive long-term global capital returns to the country. And needless to mention, REITs also houses the largest GCCs in the country. It's catering the high demand of data centers in India. It's helping to make the India's vision of smart city into possible reality. It's a very good alternate investment instrument. It's very liquid, moderate in risk, and high risk, high returning investment product. I'll go a little slow from here. So the basic question, why this product and why should we invest in REITs and invest in India? So I would say that this is the most professionally managed vehicle in the country because we understand the business underlying here is either telecom, either roads, or either real estate. So that requires a lot of professional management or the real brains to go into the real assets. This product is very liquid, the easy entry and exit because you are actually dealing these units over the stock exchanges. Unless in case we want to buy a real estate office, we would do a lot of R&D because there are exit risk, entry risk. We are not sure about the background of the on the promoter. So it gives a very easy entry and exit in real estate through buying, selling on the stock exchanges. It has high corporate governance. So SEBI is the regulator who closely monitors these vehicles and its day-to-day working, SEBI takes care of SEBI regulations takes care of their working profile. These products are very, very regular in income generation. So as per SEBI regulation, 90% of the minimum cash flows that is being generated has to be distributed to the unit holders. It has high potential for capital appreciation. And of course, the investment is so diversified. There are multiple uh, portfolios across these sectors and cities. So the question which we hear out from our investors how to invest in these. So anybody who has a demat account can easily invest in Indian REITs and InvITS as these are freely tradable on BSE NSE. Domestic retailers are invited, foreign institutions are there, foreign parties there. So eligible investors base is wide. Trading lot size for publicly listed InvITs and REITs is 1 unit. However, the public private listed InvITs are 25 lakhs per lot. So I'll make a clarification here that in REITs are public listed. However, SEBI has given a option to InvITs that they want to go for a private listing or a public listing. So the trading lot for private listed entities is 25 lakhs, which is in private listing, the investor base is little smaller. However, at the governance point, we'll see there is no compromise in the corporate governance or SEBI regulations, etc. So this is the journey how REITs have been globally running from last 60 years. In India, there's a bifurcation of REITs or InvITs. However, outside India, investments in income generating infrastructure products are typically structured as REITs or any other specified investment vehicle, but they're not called InvITs outside India. So we see this journey has begun 60 years back, and in India, we have introduced it in 2016. This product is prevalent across 40 plus countries. 1,000 more REITs are being listed globally. We have a market capitalization of approx $2 trillion. Now, one question that we have just received in the chat box also on the taxation of investors. I hope your question will be resolved here. So this is a pass-through entity in InvITS and REITs. So the distribution that goes to unit holders are in the form of either dividend, interest income, amortization of the SPV debt, as we just learned that uh, trust is giving loans to its SPV. So amortization of the SPV debt or capital gains on the sale of REITs or InvITs. So InvIT REITs being the pass-through entity, it's exempt from the tax regime. For unit holders, the dividend income is totally exempt on their hands. Interest income, you have to pay taxes as per the applicable tax rate applicable to you. For SPV debt, though it is not taxable on receipt, however, the proceeds needs to be reduced from the cost of acquisition of these units. But the capital gain on the sale of REIT or InvIT will be taxable, as it is also taxable when you trade in any other equity product. So there are associations, because considering REITs and InvITs was very new and we want to have a presentation or representation before the regulators. So InvITs uh, have created an association of theirs, which is called Bharat InvIT Association, who represents the InvITs to the regulator and in India, as well as in for REITs, their IRA, Indian REITs Association. BIA was established in March 2024 last year, and it has really helped in promoting the transparency in InvIT sector. It has facilitated the dialogue delivery with regulator and government bodies. So effectively, every week, this association body is taking our representation from REITs and InvITs to the SEBI, and SEBI is welcoming all dialogues or involvement the InvITs want through BIA. It is always helpful for the association to go and seek support for the effective policy making, investor awareness, and has been very, very active in adopting the best practices across the country. Just to give you a live example, this BIA association has a very efficient team of 4 people, and they are well equipped with the top law firms of the country, which are helping them to prepare the white papers, representations with SEBI, NHAI, or Ministry of Finance, pension fund, because pension funds are the crucial investors in REITs and InvITs. In India, we have 27 listed InvITs and 5 public REITs. So all these REITs and InvITs work under their own association, has been transparently reaching out to the investors through these associations. So I'll just touch upon few features of InvIT, just keeping a time check also. So few features of InvIT, that's minimum 90% of the net distributable cash flow to be distributed to unit holders, and at least semi-annually for the public listed InvITs. All these InvITs have to hold a minimum 80% portfolio in the constructed projects or other permissible projects only. The remaining 20% could be deployed as per the SEBI InvIT regulations. So the important and very unique to this product is the leverage ceiling is at 70%. So an InvIT can borrow from market up to 49%. If a InvIT wants to raise their leverage ratio from 49% to 70%, it has to undertake the checkpoints of the thresholds mentioned in SEBI InvIT regulations. Then only they can reach out to their unit holders, seek their approval, and then only they can raise their borrowing from 49 to 70%. To list the 3 basic conditions that our InvIT has to follow, one is that the issuer needs to have a 70% uh, uh, proposal. They should have a AAA credit rating. They should have distributed six NDCFs distribution in the past, have a track record of 6 distributions, and these increase from 49% to 70% has to be for the acquisition of the assets of this. Only then InvIT is able to raise from 49% to 70%. That ensures there's an appropriate debt mix. The funds of debt are well in plan, and there's no abrupt borrowing in the market. So this mitigates the risk also from a investor point of view. InvIT needs to mandatorily have a AAA rating. We need to have, as per the SEBI InvIT regulation, unit holders approval for almost all key decisions. Also, the unit holders who have holding to 10%, either singly or wholly together, have a right to appoint a board nominee on the board of the InvIT or trust. So every year, InvIT has to seek their approval and check whether the unit holders wants to deploy any board nomination for themselves. So NDCF term that you see here, it's net distributable cash flow, which is the cash flow available for the distribution to unit holders and after covering the operational cost and expenses. SEBI has recently given a framework for NDCF, which clearly has a formula, tells you how you have to derive to this NDCF so that there's a transparency and disclosure around it, and 90% of this can be distributed to the unit holders. So this is the most attractive feature for InvITs and REITs. So these are the benefits at glance for InvITs and REITs. Growth potential for the investment, for the investors, as you see, there's a bifurcation of the distribution. 90% has to go to the unit holders back. This provides long-term financing option for the existing infrastructure projects. Even in India, the existing infrastructure projects do not have to worry upon the long-term financing because you have that institutionalized product. It is free from developer capital for reinvestment into new infrastructure projects. So basically, that's the worry when we invest into real estate or infrastructure project in case we do not go by InvIT or REIT model. This brings a higher standard of governance into infrastructure development and management. This is a low risk investment offered to attract long term investors such as insurance and pension funds. Not only Indian pension funds or insurance companies, or even globally, the pension funds has invested into InvITs. Canada Pension Fund has invested, and multiple other pension funds and insurance funds find it is very lucrative to invest in REITs and InvITs. This facilitates the ownership of the diversified infrastructure asset for the real estate investors. This gives a long-term and high-quality assets. Interestingly, if I'll tell you for REITs, basically there are five public listed REITs which invest into top-notch real estate products and only in the metro cities. It is so the quality and the long term of the asset is well assured by this. For example, in real estate, for InvIT also, the tolls, for example, at Q will handle infrastructure tolls across the globe. So there are long term and high quality assets. You have a very reliable counterparties. We have sponsors overseas like Adia, which is a renowned name from Abu Dhabi. We have multiple sponsors from all across the globe, private equity players also. SEBI has defined a robust corporate governance framework for InvITs and REITs to work in India. For example, the SEBI regulation clearly says that 50% of the board should be independent, the policies that has to be governed. The provisions of LOD are being imposed on InvITs and REITs to ensure the committee formation, audit committee, SRC committee, risk management committee, all are being governed under SEBI LODR as other equity listed entities also. So here there's a small chart depicting how the steady growth of registered InvITs has grown in country. At 2006, we only had two registered InvITs, and now in 2025, we have 27 registered InvITs. Almost from two sectors, now we are covering nine sectors in InvITs. If you'll see the last column, the current sectors being covered under InvITs are roads, being 16 InvITs which are into highways and road infrastructure. There are three InvITs who are into power energy transmission. one in telecom towers, one in optical fiber lines, one in energy generation, one in pipeline, the other one in supply chain. Two large InvITs are in warehousing, and the one in school. So covering 27 InvITs have in nine multiple sectors and have shown a steady growth over their inception. This is a few InvIT landscape which will be very interesting to note that how many that approx 2 lakh crores of equity has been raised by these InvITs. The total MUM has been increasing every quarter. We have approx 7 lakh crores for the total asset which are under management. That's the key that we use for evaluating the InvITs. There are approx 3.5 lakh unit holders in InvITs and REIT space, which is a huge number. And the way SEBI, the ministry are promoting this product, I think this number in next 2 to 5 years, it's going to double or triple in its number. This shows that the InvITs and REITs have distributed approx 68 to 69,000 crores since its listing times. A small pictorial graph for showing the sector split basis the AUM, that is asset under management. The next slide is about the diverse investment base that we have in InvIT space. You will see that how many Indian sponsors are there, how many foreign sponsors are there. So foreign sponsors are more than the Indian sponsors. The mutual fund interest being depicted here, financial institutions and banks, insurance companies, provident funds, foreign portfolio investors, foreign bodies with their interest in this, others in non-institutional and retail investors, approximately 14 to 15%. So more than 50% of the institutional investments are through foreign investors. Currently, the retail participation stands around 5%, and an opportunity to increase it in future is increasing every quarter. So in India, the assets which are revolving are in the InvITs are more than 200 plus across all parts of India and covering almost every state. So the national highways and the toll plazas, the telecom towers, and all other InvIT sectors are spread across these geographies of India. You see how the AUM in current and how we see three times growth in by next 2030. The potential InvIT pipeline from existing infra asset base, including the existing InvIT AUM, the balance target monetization pipeline in near long term. The potential InvIT pipeline from planned infrastructure spend during 24-30 is approx 16 lakhs crores. This is again the taxation on for investors in InvIT. We just had a look through InvIT. That slide was covering for InvITs and REITs broadly. This is particularly for InvITs. The return comes in a way from dividend, interest income, capital repayment, or capital gain on sale of InvIT or units. This is the study that we have recently taken and will give you a fair distribution on the price and the distribution that has gone in these past years. This case study is basically for the road sector. I would like you to have a look upon it. I'll just pause for 2 minutes. Thank you. That was my presentation. I just want to quickly touch upon a few other important aspects. There has been recent reforms by SEBI, such as reclassifying the REITs as an equity instrument. Otherwise, this has been termed as a hybrid product. But recently, SEBI has reclassified REITs as equity investment and expanding the strategic investor definition. Are really expecting to boost the investments in these assets. Additionally, the government's infrastructure monetization push and national monetization pipeline initiative are likely to further fuel this growth in InvITS. There has been key trends shaping in REITs and InvITs in Indian market, which is the increase in the institutional investors. The institutional investors are showing huge interest in REITs and InvITs. They are being attracted by the stable income streams and capital appreciation potential in India. There's a diversification of asset classes. REITs are diversifying beyond traditional offices and retail spaces to industrial parks, data centers, hospitality. There's a growing retail participation that we've been witnessing. Retail investors are incredibly increasing and participating in this product. They're drawn by their attractive dividend yields and growth potential. Even I'll not miss out saying that government support is being very important, and their focus on infrastructure development and monetization on this product, which is very supportive environment for REITs and InvITs. So this basically InvITs are a pass-through entities, InvITs and REITs, meaning they do not pay taxes at the trust level. Instead, the income is taxed in the hands of the investor. This structure provides a very tax efficient and a key benefit for the investors also. So with this brief, I would like to pause here and just ask for some queries if somebody has. I hope, Surbi, I was able to do justice in the time you have slotted for me.
Ma'am, yes, in just short time you've explained more technicalities and this new uh, investment vehicle, I would say the REITs and the InvITs to our members. And we have time, so I would request if you can throw some light on the compliance aspect of the REITs and
Sure.
InvITs, because we being the compliance professionals, it's very important for us to understand the compliance perspective of both the investment vehicles. So if you can please elaborate a bit on it.
Sure. Let me know when I'm audible also. I
You're
think
audible, ma'am.
glitch. Okay. Okay.
Yes.
Perfect. So, needless to say, uh, Surbi, this product is being very much into demand because of the strict governance this product is attracting. So, SEBI is playing a very important role in seeking its governance. SEBI in every step is regulating the business transactions being done by REITs and InvITs, and every 10th day we are receiving new consultation paper, new amendment, because the concept of these investment vehicles are evolving a lot. So there's a SEBI defined framework for InvITs and REITs, which also includes the applicability of certain provisions of from LODI guidelines. These regulations provide a framework for formation, management, operation at each step. SEBI is responsible for registering and approving the REITs and InvITs. It ensures that these investment vehicles meet the required criteria to have a robust governance framework. Investor protection is being taken care of. For example, we have a limit on how much we can invest, how in how many streams InvITs and REITs can uh, invest in the liquid funds. We the borrowing limit is also being governed. The unit holding pattern, the like shareholding pattern in equity that we do. So there's a quarterly filing within 21 days on the unit holding pattern. Whenever there is a change in the capital structuring, which leads to change in more than 2% of the total unit holding, we have to file the unit holding pattern within 10 days. There's a requirement of obtaining and submitting secretarial compliance report. SDD and CBPIT regulations are applicable on these. There's a governance norm where we have the independent board, at least 50% of the board of the IM and the manager, which is IM to the manager to the trust, must be independent. There's a requirement of having audit committee, NRC, risk committee, stakeholder committee, just as per the applicable LODR compliances. The REITs and InvIT must disclose the audited financial statements for last 3 years and stub period in their placement memorandum or the offer document. Likewise, in equity, REITs and InvITs have to quarterly submit quarterly and year-to-date financial statement results within 45 days of the quarter end, except for the final quarter. There are disclosure regarding net borrowing ratios in the financial results. So overall, SEBI is taking a complete oversight and monitoring of this product. And by each amendment, if you'll see in last 2 years, how the amendments have been evolved in the master circulars and SEBI regulation, this has been very competitive.
Ma'am, these are the compliances you've explained for the compliance officer being appointed by the REITs and the InvITs, that as a compliance officer, he or she needs to do. But being a practicing professional, how can he or she assist a REIT or InvIT, or how to set up that? And is there any kind
So
of
we
special compliance or assistance which a practicing company secretary can provide to these REITs and InvITs? And it can act as a special opportunity area for the practicing professionals.
very rightly said, this is a very niche area where, as the compliance officer sitting inside the company trust faces a problem when we seek for the advice from the practicing professionals. So my piece of thought for my colleagues and my friends in practicing is that this is a very niche area. It's just like another mutual fund or NBFCs way back 20 years back. For practicing company secretaries, secretarial compliance report is mandatory. We need to have the secretarial audit being done for REITs and InvITs, which requires specialization in SEBI InvIT regulations, REIT regulations, master circulars, the clarifications, FAQs that SEBI bring or give in periodically. There are a lot of scope for practicing company secretaries also to represent in SEBI for the REITs and InvIT products. They have small working groups also, SEBI, which they invite people from the industry and from the professionals to represent to represent these products. Even at the association level, the representations could be made through practicing company secretaries. So I think we all should, it's a loud shout out for all the practicing CS also to please start giving advisory or to start looking at this side of the SEBI regulations on InvITs and REITs very seriously, because next 10 years REITs and InvITs will definitely grow in India like any other product, like any other mutual fund capacity building that has been done.
Ma'am, we have certain questions from the members.
Sure, let me
So,
just
yes.
take them. If I see the question, I see one question coming in. What is the minimum investment required for REITs and InvITs? So I'll say the minimum investment for REITs, real estate investment trust, and InvITs in India is typically 10,000 to 50,000. However, this amount may be varying depending on the specific REIT or InvIT, as a broker platform in which you are investing. For privately placed InvIT, the minimum requirement is 25 lakhs per lot per investor. These are easily tradable on the stock exchanges. You need to have a demat account and a trading account with a broker to invest in them. The next question is about the role of SEBI in regulating REITs and InvITs. I just briefly touched upon how SEBI has been regulating this product, how closely SEBI is doing that, how SEBI is aiming to promote transparency, accountability, and investor confidence in this investment vehicles, and ultimately contributing to the growth of the Indian capital market. So they're always welcoming uh, group discussions with SEBI on the applicable regulatory framework and how to improve it for investors which are actually globally looking at Indian markets. The next question is regarding the risk involved in the REITs and InvIT. Okay, yeah, I actually lost in that my presentation. So both REITs and InvITs carry certain amount of risk like any other product, but that specific nature to those risk is on dependent on whether the trust is publicly traded or not, type of assets is holding. So I'll generally cover the common risk on both REITs and InvITs. Could be a certain percentage of interest rate risk. So the rising rate can increase the borrowing cost for the trust. But having said that, the leverage as on these assets is actually typically low because the valuation modeling that is being done to evaluate the debt equity mix, the leverage mix, it's generally the fluid part is little lesser and the fixed rate risk is more. So effectively, if you'll see, then leverage rate is not that much risky for these underlying assets. Yes, there could be some market risk like stock, units, publicly tradable, subject to market fluctuations, etc., economic turndown, or any underlying asset is not performing well. But generally, if you invest in good InvITs who have top-notch products like highways or telecom or not to be biased on anything, but the the infrastructure asset which is actually there, it's a real asset or the real performing asset. So which makes lesser risk involved in this. There is one question that where, like a real estate market, is the REITs also give that risk of demand risk like office for real estate or obtaining certain projects? This is from Mr. Jayanta. So, as I just told you, that REITs are basically investing into projects in metro in six metro cities of India, and they are actually top-notch projects. There are prime investors in these. There are the rates are fixed. The liquidity is fixed. So you will not actually think that of the low market value. It's not like in the next corner any real estate projects. There are huge multiple crores investment that goes into a real estate project, and that's the beauty that you get a real good prime asset in the REIT or InvIT side. Um, yeah, so one question that has come is what is the function of investment manager? That is the IM. So, as we just discussing in the structure of the InvIT, that there's a trust, there's a sponsor, there's a trustee, there is a asset manager, there's an investment manager who takes care of whose crucial role is to manage the InvIT assets and investments. So it takes care of the management of the funds of the trust. It manages the asset, financial management is being done by that. The governance and the compliance is also the responsibility of the investment manager. It's reporting to trustee investors on the InvIT's performance and compliances. It maintains a transparency and accountability, and it oversees the operation and maintenance of the infrastructure projects. The investment manager has to mitigate and manage the risk in the interest of the unit holders. It has to ensure maximization of the returns and distribution to the investors. So in overall, they are managing the investment and asset financially and operationally. So operation part, the day-to-day working is being parked to the project manager, and overall investment management and asset management is done by the IM. One question is who's recognized as the compliance officer of the InvIT investment manager. So, an investment manager who has raised a high value debt, generally broadly the REITs and invest raise debt. So once they come into the guidelines of LODR, the compliance officer has to meet Regulation 16 of LODR. Also, the InvIT regulation says that any employee has to be the compliance officer of the investment manager. So, investment manager is 100% across all REITs and InvITs are the company secretaries, and this is a very good area for all company secretaries to explore, to be on the part of the investment manager KMP role, and to undertake do the governance and be the face of the company in the governance side. Um, Monica Gupta has asked for the difference between REITs and InvITs. So, Monica, the whole presentation in the starting, I started with that only. Let me just share it again, and I will like to you to have a just read on this. I hope my screen is visible. Surbhi, let me know once my screen is visible.
Yes, screen is visible, ma'am.
Is okay. So just to touch upon again, REITs are the vehicles that own and operate the income generating real estate, allowing investors to earn the return on the income produced without directly buying the real estate property. Similarly, an InvIT is an instrument that enables the investment of money into the infrastructure projects. This infrastructure projects are being defined by Ministry of Finance, and these are the sectors that you are seeing on your screen are being defined as a infrastructure sector. Somebody has asked for this slide. I will definitely share with Surbhi, and Surbhi can take it further. Somebody has messaged that can I reach to InvIT Association BIA for excess deduction of the charges by InvIT member? So no, BIA will not be the right uh, association to reach out for that. You need to reach out to the InvIT IM team. One question is how to trade in REITs and InvITs. I have uh, covered that in my slide. I will show it up again. So you need to have your demat account, and just like you trade any other freely tradable security on stock exchange, you can do that on NSE BSE. The trading lot size is also available on your screen.
So, ma'am, we can trade in the REITs and invest through the investment platforms like Grow or Zerodha or something like that also.
Yes, so mutual funds are doing that, but SIPs are not using REITs and InvITs product.
Okay. So we have to like directly approach to the REITs and invest for the investments. We cannot do it directly through Grow app or these apps which
You
we
can
are
do
using
you
for
can do
trading.
that. It's a freely tradable security, just like any other equity that you use any other DP platform. You can use that.
Okay.
There is a question on the difference between IM and PM. That is, who is the investment manager, or what is their role? So I just clarified that investment manager is taking care of the investment assets, financial modeling of the InvIT. Vis-a-vis, the PM, project manager, is taking care of day-to-day activities of the infrastructure or the REIT product. It ensures the projects are completed on time, within budget. All the day-to-day activities that you think of are being handled by the project manager. Between IM and PM, there could be a fees adjustment, fee agreement, what PM is will be charging to IM for doing that. So that's also one of the aspect. Then the next question is also regarding the project manager role that we have taken up. I think with that, all these questions are broadly covered, Surbi. In case you receive any other further questions, happy to take it up further. And you may email me that. I'll revert back to you with this PPT also. I'll try to share that with you in a day or so. Happy to have any other questions by our professional members.
We have received some questions, and I would like to take some of the questions during the session only, because I think it is for the benefit of the members. First question that I would like to take is that REITs and InvITS includes the sensitivity to the interest rate fluctuations, sector-specific operational and demand risk, and adapting to evolving regulatory framework and compliance cost. How to get rid of these challenges means how we can, as an investor or being as a compliance officer, can assist our clients not to be into these risks, and how we can avoid these risks.
Okay, so as you just said that on the demand or the operational risk, what are the risk when how we can mitigate those risks and the interest sensitivity also. So let me just bifurcate that question. And in the interest sensitivity, as I just said, that once the modeling etc. is being done, it is being done in that curve where the interest liquidity sensitivity is also taken care in the account, and it's been account for while evaluating the model etc. Since there's a limitation on the borrowing, as we just discussed in our presentation also, so the interest fluctuation part broadly will not make any much difference. It will definitely make a difference, but not if you just see the difference in overall scenario. It will not be very impactful on the in on the overall return to the unit holder. Also, there are high the regulators which are regulating these infrastructure and real estate projects are a very top-notch regulators. For example, if I talk about the road infrastructure, the NHI is the one of the regulator in for roads. So all these any regulatory changes that comes in. For example, recently we had the annual pass noise or any change in WPI, etc. All these which affects the which are actually the potential risk and affects the real infrastructure projects are being taken care by NHI itself. So if there was some disturbance around these policies or the framework, NHI will come up and will take the position and will try to resolve the issue at themselves only. For example, for this annual pass. So NHI came up with the formula and they gave the revenue to the infrastructure project. There was a report from CRISIL also where they said that hardly after the annual pass disturbance in the industry, hardly 3% uh, variation on the projections of the InvIT business was there. So marginally for wide space for InvIT and REITs, uh, a base of 3%, etc., is very low. And the credibility of all the debt holders or the providers is also branded. Like if you see IFCs being investing or reputed banks are being invested, so the total debt risk is being framed like that there is a fixed cost of investment which is through term loan or etc., or through debt which is also defined under the rates price. So there's marginal review and the wholesome, if you will see that as a broad picture, the net effect will be very low. Considering the quality of the assets, the regulators we have, so the risk is slightly mitigated that ways.
So one of the last questions I'm going to take now only. The risk management committee is applicable on all REITs and InvITS as per SEBI LODR.
Yes, absolutely.
Okay.
So
Okay.
all the provisions of corporate governance of LODR are applicable on REITs and InvITs also. And there are few lesser compliances which are on privately listed InvITs. But however, broadly the SEBI regulations or SEBI regulations provide the governance framework for under which the committees, boards will work, and which is broadly derived from the LODR. The provisions of the LODR are applicable in that.
Yeah. Okay. And if I'll receive any other further questions, I will share with you. And I will request you to share the slides with me so that I can share with the participants who've asked for. And now I would like to place formal vote of thanks to you on the behalf of the members and on behalf of Institute of Company Secretaries of India that you've taken your valuable time on Wednesday to apprise us on the topic, which is very new to us and which is very like having so many opportunities either for the compliance officers in the employment or in the practice. So thank you so much, ma'am, for sharing your valuable knowledge with us on this day. Thank you so
Thank
much.
you, Surbhi. Thank you to the Institute for giving me this opportunity to interact with my peer colleagues.
Thank you, ma'am.
Thank you.
Yes.